So, you're very welcome. You're a guest today. More importantly, I have a role for you that I'd like you to participate in this conversation with us. So there are 3 things I'll ask of you today. Number 1, please have an open mind. Is that fair? You can do that, right? Secondly, please challenge the assumptions. We wouldn't be analysts if we can't take the time to challenge what the panelists are saying. So use those question tags and keep this interactive. Thirdly, please have fun. If any of you knows me well enough, if I could throw a party, I would want it to be in the evening with a cocktail. So please stay on to the very end, right? Can you do those 3 for me? Yes. Fantastic. Now, when I started this conversation, I asked myself, and clearly you can see already, what is this uncharted future? If you're young enough, like I am, you probably grew watching these cartoons. You know the Jetsons and the Flintstones? What do you remember about the Flintstone? His car had to be pedaled and accelerated by them running. And to stop it, you had to use your feet. And the Jetsons got into this high-tech gizmo and zooped around the world with that little guy there, the dog. And I asked myself, is that the future that I've gotten into now? How many of these gadgets that we saw at the time are playing out where we are today? Now, the Jetsons had a housemaid who was called Rosie. She was a cartoon at the time. Her job was to clean. But if you've been looking at developments in IT right now and artificial intelligence, Sophie is there. And she's just been made a citizen. That's who you're competing with. She's answering questions. She's met Will Smith. I haven't met Will Smith. Okay? She's a citizen. So when we're having the conversation of artificial intelligence, the question I have for you is that, is it technology leading us, or are we part of this conversation? Do we have a role as investment professionals in this conversation, or are we just letting it happen? More importantly, what is that role for us? Okay? Banks are changing. Credit processes are changing. You have whole departments moving out. Insurance. People can apply for their insurance now by just taking a picture of your car and filling your claim form. Where will those jobs go? As technology happens and these disruptions happen, your question is, what is your role? More importantly, for those who are analysts, how are you modeling this future? Or are you just assuming disruption won't happen? Debt is your next part of the agenda. This is my conversation with you. We have 3 topics or 4 topics, and I'll just highlight them. When we talk about debt, is there anything like good debt? Is my question. You will have a panel talking about this. But more importantly, when I think about debt, and I'm going to step away from sovereign debt and ask the question as a person, when is debt too much for me? At what point as an analyst do you draw the line and say, this is too much? Or can I actually grow my capital? Can I grow my wealth without debt? In question then becomes, is there good debt? As a government, is there a point when debt is enough? Is there a point when debt stops being good? Is there a point when we should stop borrowing? That's a question that I'm asking today. Stepping to the next topic is the infrastructure. Yes, the numbers that are thrown out are quite big. When you talk to anyone who is a foreigner, and it will be interesting to hear from George, when they look at East Africa, they see opportunity. When we as East Africans look at ourselves, we don't see this. The Ministry of Industry has talked about 55 billion going into infrastructure in Kenya alone, and this is in US dollars. If you look across the region, if I look at Uganda, if I look at Rwanda, there's stories of roads, there's oil, there's energy. As we are having that conversation, my challenge to you as an investment professional is, what is your role? How can you take a plot? How do you play in this space? If you looked at the papers a few days ago, there was a story about shortage of hostels in Nairobi, and that the public universities are in debt. And my question just became, if I asked in here today, how many of you can put a transaction together to raise that debt? No one? Really? You have CMA here. By a show of hands, would you be willing to raise debt to fund public universities? Do you know how to put it together? That is my challenge. Where are you playing your space in this infrastructure conversation? It is not enough for us to be saying to Paul that we need capital markets to do something. We have a role to step up as well. And finally, personal branding. When I stand here, I am Patricia. I'm PK for some of you, but more importantly, I'm a daughter, a sister, I'm a friend, I'm an auntie. All these things define me in some way. My question is, what defines you? And more importantly, how do you step up and present yourself as a charter holder? How do you present yourself as an investment professional? How do you stand out? How do you get seen? How do you make a difference? So today, my invitation to you is to please join us in this conversation and let's shape our future. Thank you very much. Without further ado, and thanks for your patience, I'll invite my friend, Mr. Paul Muthaura, who is also our key sponsor for today. Thanks, Paul.
Thank you very much, Patricia, for those opening words. And, when I arrived, we were both sitting in the back in a corner, tightening up our speeches, and I think she's done a much greater job than I have. So I hope you won't be too disappointed. Hope I may not be as challenging as her, but I think she's raised some very fundamental points around how do we understand our role in transforming and driving economic development. As a capital markets regulator, we're very conscious that we're not a regulator for the sake of regulating. We have to regulate to create a conducive environment within which business activity can go on. And in delivering that business activity, how is that actually translating to the ultimate economic environment, both at a domestic and a regional level? That poses some very fundamental questions around appropriateness of products, how we're responding to innovation, how we're taking on disruption, and effectively embracing the potential that may come from that disruption, and how we effectively channeling all the potential funding flows in the world into the most constructive sectors of the economy. I think one of the things we're very conscious of as the authority is there is absolutely no absence of capital in the world. The fundamentals of global finance really treat capital as a very finite product that you're all competing for. But in reality, in a world of negative returns in the largest markets of the world, a very aggressive pursuit of yield and growth looking out into the world, now is much more a time of how are you best positioning yourself in terms of your ability to understand the potential opportunities, manage the risks, and address and provide a transparent and reliable return. I think as Kenya, when we debate the issues around a reliable return, I think we continue to face significant challenges when you look at double-digit government borrowing. So if government is giving you a risk-free asset at 11, 12%, then who amongst you is going to tell your client, I have a very impactful project that's going to deliver to us very strong and reliable 7% return over the next 30 years. But there's a it's a risk-free asset at 10. How are you going to convince them to look at infrastructure? How are you going to convince them to look at real estate? How are we going to look at the opportunities that may be coming from some of these fintech innovations when we're looking at some of the underlying fundamentals that are affecting how funding is flowing and where it may ultimately end up? As an authority, we continue to be extremely committed to understanding not only the opportunities that can come from fintech, but working towards trying to create a conducive environment for it to truly evolve to its true potential. In the context of the planning cycle, where we'll be starting a new strategic planning cycle with effect from July of this year. And one of the key tenets or key strategic objectives that we're rolling out for the new strategic plan is looking fundamentally at how we can leverage technology to drive efficiency in the capital markets value chain. Now that's a very loaded statement. And it is born from a recognition that as a regulator, all we can do is try and address the issues around support for effective implementation, how we can introduce a level of certainty, transparency, and consistency in terms of the products that are going to become available, but still retain an appropriate level of flexibility to be able to allow a diversity of market solutions to come forward. Now, in that context, I think we're very glad to see some of the critical steps that the government of Kenya has taken in terms of the February announcement by the Ministry of ICT on the launch of distributed ledger technology and artificial intelligence task force to really understand how are these evolving technologies going to be able to have a meaningful and sustainable impact on Kenya, how we structure operations, how we build our registries, how we look at our payment systems, how we look at interregional trade. You know, with the recent announcement of the Pan-Africa Trade Agreement, one of the continuous underlying issues with Africa trade has been the absence of infrastructure on the continent. So even where you may want to trade across the continent, are you actually able to move, be it products, services, easily within that region? But when you look at the potential that can come for the leapfrogging of legacy technologies, especially in financial systems, with the evolutions of fintech, we start really having to ask the question whether we can continue to use the absence of infrastructure as an excuse. Because there are alternative ways you can really look at channeling funding, creating opportunities, and moving assets and deploying them where they're most impactful. Now, within Kenya, we're very honored to be working with our industry on the implementation of a 10-year capital markets master plan. That's really looking at how we're going to position Kenya as we aspire to be the heart of capital markets financing on the continent. But in setting such an ambitious goal, we remain conscious that we need to understand how we can leverage evolving opportunities to address transparency, to support liquidity, and ultimately to ensure fundamental impact of the markets on the economic environment. Now, when you look at the history Kenya has had, and our branding as the Silicon Savannah, that was built very much on the back of the M-Pesa and mobile money revolution. In the last 5 years alone, M-Pesa transactions have gone up by 250%. And that has unlocked a whole new spectrum of financial market and instrument access. It's transformed how we conceptualize financial inclusion in our country. But it has also simply set a foundation on which we now need to build. The journey we've walked on mobile money, ultimately you'll find is really leveraging to a certain degree, the simplest level of technology to have an impact. But now we're facing the challenge of how we're going to escalate that, how we're going to make the solutions we're looking at scalable to look at much more transformational growth in the financial sector in the country, as well as in the region. As an authority, we've been working with many of you in this room, as well as both local and international partners, towards developing or designing an appropriate, what we call a regulatory sandbox strategy, so that we can create a safe space within which new financial technology can evolve to try and address capital market solutions within a controlled or limited regulatory environment, so we can truly assess their potential before, one, they're released into the wider market, but also to make sure that we're building an appropriate understanding of the nature of the risks and concerns to ensure that also our regulatory models will be able to be responsive to the new challenges that those products will be introducing. To that end, the authority has been very honored in the last 3 years to be recognized as the most innovative capital markets regulator on the continent. But we're also very conscious that receiving recognition like that ultimately puts very much a bullseye on your back. Because every day people walk into our office and they say, but I want to do this. Why are you not being responsive? And you try to highlight risks, you try to address some of the fundamental underlying investor protection and transparency issues, and they're saying you're not being innovative in the way you're looking at this. So it is a challenge. but it is a challenge that we very warmly embrace to make sure that we can continuously evolve as a business, to make sure that we are creating a conducive environment for the growth of the capital markets in our country. Looking at recent studies, a report released by the East Africa Venture Capital Association, they highlighted that the fintech marketplace in East Africa is a culmination of several unique factors, including strong mobile penetration, payment data, boosted by hardwired partnerships between banks and MNOs, but challenged by infrastructure support, cautious funding, uncertainty, and lack of sector direction due to lack of regulations in the area. Now, we are trying to address the regulatory aspect, but as Patricia challenged you, it is you who are going to address the fundamental issues around uncertainty, undue caution, and driving towards clarity in what these opportunities can be. We have, when you look at the growth of our capital markets, they have grown very incrementally. If you look at the nature and scope of the economic development we've seen in our country. And it is only the people in this room who really have ultimately the credibility to a degree to give the guidance, give the inputs, work with the various the investment decision makers to make sure that they're looking at issues from a much broader perspective in terms of how our ever-growing pools of pension funds in the country, our significant pools of SACCO money, insurance funds are actually going to be deployed in a meaningful manner and not just simply going into this endless cycle of government debt investment. Now, as I conclude, ladies and gentlemen, I'd really like to just take this opportunity to appreciate the partnership that we've had with the CFA Institute of East Africa. It's been fundamentally focused around building awareness and looking at empowerment. We note that just last year, we're very honored to provide one of the judges for the CFA East Africa Research Challenge, which then culminated in the International Research Challenge. And in that context, we hope we will also enjoy many of your support and participation in the rollout of our own Capital Markets University Challenge, which will be commencing in June of this year and cutting across the whole country. A number of you will remember that about 2.5, 3 years ago, we rolled out a Nairobi County University Challenge, but now we're going across the country. And we're only going to be able to do that because we're leveraging technology so that we are able to manage the logistics, increase the inclusion, and really improve the capacity of all the participants to improve the overall functioning of that. So I very much look forward to working with all of you to make sure that comes to a reality. And I'm sure a number of you will be invited as judges for that session to test the next generation. I want to once again just join Patricia in really appreciating and thanking you all for joining us for this conversation, and we look forward to the same. Thank you very much.
Thank you, Paul, for that.
And progress has been made. It's very exciting to be here. So thank you for inviting me to this this special conference. As you might or might not know, I'm a member of the Board of Governors, the strategic, the body that sets the strategic oversight for the CFA Institute. It is comprised of 15 members throughout the world. I visited other places in the region. Last time I was here, I also went to Uganda. I've been to Nigeria. I'm going to Egypt in a couple of weeks, and I've been to Mauritius. And I've been very impressed by a number of things, but most of all, the infectious enthusiasm and the expanding talent base. It's just very nice to see. You might tell by my accent, I'm not American. I'm actually Canadian by birth. I was born in a place called Thunder Bay, Ontario, and people think that's kind of a funny name for a town. Whenever I come back to England, they go, oh, you're the guy from Thunder Bay. So I'm from Thunder Bay. I spent the first 35 years of my life in North America, in Canada, mostly Western Canada, and the United States. I was in the oil industry, And I was working as a professional in Denver, Colorado, when I decided to do my MBA. And this kind of changed my life from that of an oil professional to one of more of a financial services professional. And I finished my MBA, and I was interested in starting the CFA program. And I was also a little bit itchy to get more involved in the global markets. Sitting in Colorado wasn't international enough for me. So logically, I decided to move to London, England. My parents were both European. My father is Greek, you can probably tell from my last name. My mother is Scottish. And in one way or another, I thought I was discovering my roots by coming to England. In another way, I saw a huge opportunity in the capital markets. Because when I came in 1998, it was a very opportune time in the European capital markets. Europe was moving to a more market-based financial system. The traditional bank-based continental European countries were looking to develop robust markets in both equities and corporate bonds. So in 1999, it was the advent of the euro, and that created a lot of opportunity in that whole sector to develop the capital markets in Europe. And I decided that I would become a corporate bond trader and take advantage of that opportunity and see that growth in the capital markets, which eventually did materialize. So that's a long background about myself, but my intention here is to discuss, I very much appreciated Paul's perspective. I guess I'm coming from a little bit more of an external, more of a London/global perspective. So to look at the trends in the global capital markets and then focus on the regional advantages and opportunities here in Africa, here in East Africa, here in Kenya. So let's back up a little bit in terms of what is the role, the key role of the capital markets. And simply, the capital market function is to connect the providers of capital to the users of capital. They channel savings into productive investment and help companies, investors, and individuals manage their risk. Capital markets also provide a supplementary source of funding to bank lending. And we saw this clearly in Europe over the last 20 years as that transition took place. Now, if we look at the whole world in terms of the regions that dominate the capital markets, you've got US or North America, I guess. You've got the Eurozone, you've got UK and Japan. And if you look at financial stocks, so the stock market is a kind of a proxy for development of capital markets, 80% of that global financial stock is comprised with those four regions. I mean, the USA is huge. I mean, alone they're almost 40% of the world stock market. And of course here in Africa and East Africa, it's a very small share of the pie currently. Let's get back to the mature markets for right now. The combined mature markets like the UK, like the US, the combined value of corporate bonds and listed companies is many times more than that of bank lending. In the UK, that number is 4 times as much. The amount of capital raised in equities is equivalent to about, in the UK, about 6% of GDP. So it's a very significant number. And the capital markets in the UK play a significant role also in the Eurozone economy. Of course, now we have Brexit, things are becoming a little bit more complicated, but there still is a very, very strong interdependence in the markets between UK and Europe, even though UK will no longer be part of the European Union going forward. And there have been a number of structural headwinds in the developed markets and in Europe since the financial crisis 10 years ago. We've got a push for regulatory reform, a very different regulatory environment than what Paul was talking about here. We've got Brexit that I mentioned that needs to be navigated, and there's a lot of uncertainty around Brexit in terms of what's going to happen over the next 2 to 5 years. We've got fintech, and I'm glad to see that a lot of including the next speaker, John, but a lot of today's discussion is going to revolve around technology and fintech in general and the relevancy associated with that in the capital markets. And then international competition and international relationships. And there's all sorts of geopolitical shifts and political tweets and whatever you want that changes the world. But ultimately, you know, I think we're going into a new world that is going to benefit regions such as here. The global markets have become increasingly complex, and I truly believe that they need to be less complicated and more transparent. They need to focus on the value and the benefits of society, and that's why I'm so I guess proud to be associated with the CFA Institute. And we'll talk a little bit more about the CFA Institute later in terms of how, you know, even in the mission statement, the final part of the mission statement is for the ultimate benefit of society, and you know, that is very powerful. We are a very interesting point, as I mentioned, in world history. There are a lot of key themes emerging in trade, regulation, demographics, and business relationships, and I just want to touch on a few points on each of those areas. So in terms of global trade, it's undergoing change, like I mentioned. There are regional shifts. UK voted to leave the EU. I'm watching CNN since I got here, and it's all about, you know, it's Trump, Trump, Trump. Very forceful in promoting his Put America First agenda. And then on the other hand, Asia and China want to play a very active role in the whole globalization process. So we've got a lot of moving parts. And trade agreements like NAFTA, which I'm very familiar with because NAFTA is US, Canada, and Mexico. And when I was growing up, the biggest trading relationship in the world was Canada and the US. Now it's the US and China, and that's how the world has changed a little bit. But the trading agreements like NAFTA are very laborious and complex for governments to negotiate and now potentially renegotiate. But most trade does take place on a regional basis, so it'll be necessary for regional trade barriers to dissolve to facilitate further economic growth. And I know Paul referred to some of the progress here in Africa in terms of bringing down the barriers to facilitate more regional trade here in Africa. In terms of regulations and practices, I think one of the trends is that individual countries are taking more control of the structure and the daily operational practices, and I think we'll talk a little bit more about that today. There is an increased, I guess, concern about the level of regulation at not just the domestic, but also at the regional and global levels. And of course, there's a lot of interrelationships between all of those. Regulators are keen to ensure that financial institutions have an effective culture of risk management, where excessive risk-taking is curtailed. And that's certainly been the focus since the financial crisis. But then again, in some cases, governments are limited with the resources, so might partner with other entities to achieve regulatory objectives. I want to touch on demographics a little bit as well. Global demographics have changed, and generally the population around the world has aged. For the first time, there are more people that are aged 65 and over in this planet than children under 5, and that's a significant shift in demographics. The UN estimates that by 2050, 15% of the world population will be over 65. Now, that may not sound like a big number, but that aging population, the senior citizens, so to speak, are going to create an increased burden or undue pressure on society in terms of most specifically spiraling healthcare costs, pension costs, etc. These trends that I talk about are maybe more prevalent in developed economies, more Europe and North America, than emerging economies. And so that could certainly be more disadvantageous to Europe and North America, and perhaps be one of the competitive advantages here in Africa and in Asia. One segment that will benefit in the developing world is definitely the retirement industry. It's already very well developed, but the increasing need for professionals to plan, to save and to invest for retirement is certainly an area where the CFA Institute is very involved in terms of our membership base and also our advocacy efforts. And then one last trend that I want to talk about is business relationships, in terms of ultimately clients are taking more control of their financial relationships. They're more discerning, they have more access to alternatives, and this will encourage businesses to be more focused, more competitive, improve their practices, and hopefully drive improvements and also foster a better service. Financial business models will be less one size fits all and more customized, more niche in the future. So ultimately, the successful financial institutions are going to be the ones that are going to be able to adapt to these changes. And like everything, and a lot of the theme of this conference is technology will be an enabler. How much of an enabler? Well, the devil is in the detail, but certainly it is quite commonly viewed that technology is going to be the catalyst for disruption in our industry and make things happen more quickly. So let's now talk about the advantages in Africa, and maybe more specifically because Kenya is one of the more successful areas in the region, and there are a number of advantages which are go across the region. The first one is economic growth, and I'm quite excited when I see the growth numbers around the world, and you see, X country is growing at 1%, and this country is growing at 3%. Growth is abundant in emerging markets, but especially in Africa, especially in East Africa. In terms of GDP, I'm telling you numbers that you already know, but Kenya has been growing at a rough clip of about 6% a year. It's forecast to be a little bit more this year, 6.5%. And to put that in perspective, if you look at the World Bank numbers, the global economic growth this year is expected to be about 3%. So Kenya is at a run rate of over 2 times the global run rate for growth. This will be driven by an uptick in investment, manufacturing, and trade. And like I said, the advanced economies are growing at a slower rate, closer to 2%. Emerging markets are projected more in the 4 to 5% region. So over the next decade, many countries that were classified as emerging markets will be developed markets. If you look over the last 50 years, countries such as South Korea, Singapore have made rapid improvements and now are considered, leaders in the developed world. And I'm not going to be alive in 50 years, but I would be delighted to come back here in 50 years and see Kenya being one of the global leaders. But in order for that to happen, there's a number of things that are going to have to happen. But I think Paul alluded to a lot of things in terms of the regulatory environment and what is needed to succeed. If we get more specific to the capital markets in terms of just general GDP growth, we have the same kind of statistics that you're all very aware of. So the stock market, one of my favorite measures is the stock market capitalization relative to GDP. The global average in the last few years is about 80%. USA is 147%. Hong Kong is like 1,000%, but Hong Kong is a very different situation. It's a very small, concentrated capital market intensive state. But USA 147%, China 66%, and then we have Kenya at 25%. And I would expect those numbers to grow significantly over the next decade. Let's talk a little bit about another advantage, the young population. So I think that is a real asset to the continent to have this youthful population, a population that can promote modern ideas, in creativity and tackle the challenges that we have here. A growing entrepreneurial spirit, which I've seen many anecdotes, many examples of the entrepreneurial spirit and the explosion of innovative companies throughout the region. And I think that, you might have seen Bill Gates visited Nigeria, I think it was a couple weeks ago, 2 or 3 weeks ago, and I was interested that he really reiterated that, and then we're talking about Nigeria now, we're not talking about Kenya, so different circumstances, but talked about the need that Nigeria needed to do more for its people in healthcare and in education, which I think are two of the central pillars in terms of in terms of making things happen. He alone committed $1 billion of his foundation's money to invest in the future of Nigeria's young population, saying that the current plan is inadequate and that the youth will be an engine of growth. And then the third area, I think, and we're talking Africa in general, where there's a big advantage, is in the commodities arena. I come from Canada, also a very commodities-rich country. But Africa has been a huge exporter of primary commodities, maybe less so Kenya, but the whole continent has been very much an exporter of commodities. And I guess this is being seen as both a blessing and a curse. A good example again is Nigeria, the 8th largest exporter of oil in the world, but yet many Nigerians are still living in poverty. Rather than funding the healthcare and education, there is a lot of infrastructure investment needed to change things there. But the good news is that Africa is beginning to diversify from commodities and realizing that external investment cannot rely always on Chinese investment, creating things like investment promotion agencies to operate to aid investors with registration taxes and other things. Very succinct examples where the entrepreneurial spirit is growing and will pay dividends in the future. Most importantly, what is required to get to the next level? So first of all, external investment. And although the stock markets, as I mentioned, are relatively undeveloped in terms of smaller volumes and lower liquidity, these challenges make it difficult to cultivate robust trading, analysis, and broking activity. One of the big challenges is in attracting foreign capital. It's obviously a key to economic growth and vitality. So more products, in my opinion, more products are needed to meet the needs of external investors. And one example is a couple years ago I was in, one of my favorite areas as an asset class is emerging market debt. I like emerging market equities too. I like emerging market equities much more than developed market equities. First of all, they're cheaper, which I like, but I also think there's a lot more potential. So it's a very good risk-reward trade.
It's been around for a long time, but it's just the innovation of cryptography that's turned into blockchain. And then when you put that together, each block contains a hash, as he was talking about, pointers, and a timestamp that says this is what happened, this is what time, and the transaction data, which is transparent, and then all put together, which makes it very resistant to modification. When someone was talking about transparency and being able to change data and being able to try and, transfer data from what it's supposed to be something else, it's a little bit more difficult using blockchain technology. But also it makes data easy to find and it makes it easy to store, and also there's ease of transaction and quicker movement of, when you talk about monetary systems, payments, remittances, and things like that. So that is sort of really what blockchain is technology. If you look at the evolution of technology in the world, we have the internet. And we sort of missed out on that in Africa because, it was brought by other people. But then we have the mobile phone, and we sort of missed out on that as well, a little bit. And then there's blockchain. And we're still missing out on it because we're still contemplating, can we do this or not? Well, it's happening anyway. So either you like it or not, It's going to happen, and if you want to join it, you will. If you don't, you'll miss out anyway. But the beautiful thing about it is, George talked about education, which is a very important part, because I think one of the problems that, Jack Ma's always talking about this all the time, every time we're in a conference with him. You need to rethink how you do education. We need to rethink how we do education. When Patricia talked about robotics, again, if we don't rethink how we do education, we will never catch up with the rest of the world. And this is part of what blockchain is. If you move on, question for you. How many people have heard about own a cryptocurrency account? Or have bought cryptocurrency? Or have bought Bitcoin? Raise your hand. How many people have a wallet? 1, 2, 3. Nobody else. 4. And you guys are financial experts. Nobody's bought Bitcoin. Nobody's traded cryptocurrency. Nobody at all. Okay. And another very important question. Anybody at all involved in any blockchain technology project in this room? Apart from George. Nobody. Okay. Okay. So when did it all start?
Did you ask about technology?
Yes.
Yeah, my hands are
Okay. I bought Bitcoin in 2010. It was about $36 then. I bought it not because I was an expert, but just I like technology and I like anything that tells me that people are pushing the barrier. So I'm a risk taker, so I'll take the risk. Because at the end of the day, it's one or the other, It's either you're risk prone or use adverse. I'm very risk prone, so I'll always take a risk to make $1 or $2, really, if it makes sense. And technology, the first technology risk I took was buying into Google years and years ago, when people said that Google would never survive and the shares wouldn't work. And from that, I kind of developed an appetite to always taking risk in technology. When you talk about what is blockchain, where it all started, again, Satoshi Nakamoto, we really don't know who he is, if he's a person or if he's not, because I've never seen him, and nobody really knows where he resides. But we all agree that he's the one who said, maybe I am Satoshi Nakamoto. I use it as a pseudonym, really John Kamara. But at the end of the day, the idea of blockchain is that it had no reliance, it's a digital signature, and it works on a peer-to-peer network. And it works in proof of things, proof of work, proof of service, and proof of integration. And it's also public. It's public transactional history. So basically it means that I can access information and know that if I bought land last week, like in Nigeria, you'd go and buy land and then 2 years later, somebody would say, that was my land. But no, I just paid $2 million for it. No, it's my land. This is my document. Because a document is not stored properly, because there's no real documentation, then you find that people always dispute over things like that. You go about medical records. I try not to go for treatment in most places, and I moved back to Africa 3.5 years ago. I remember going to a hospital, and it was a government hospital, actually quite expensive, and they said, oh, we did all this stuff. Then I went back to the same government hospital about 2 months later. The same doctor had no information about what they had done to me 2 months ago. Now, imagine if I was really, really sick in a moment and he couldn't find data to actually understand what had happened to me before to continue to medicate. So he started from the beginning again. I'm like, dude, man, I'm leaving. I can't take these chances. And this is lives you're talking about. And that's why if you look at the mortality rate here, especially with women and kids, it's very high, because a lot of it's because of data. It's not because we don't have good doctors or because we're actually not smart. We are. But it's also how we store this information and the instant access to this information. And then, obviously, again, you use around technology, the rules and incentive and force through consensus mechanism. So basically what that means is it's telling you that everybody has to agree, or at least a higher percentage of people in a network have to agree for you to say, this is true. So it's not just one person, him saying, yes, this is the way it should be, or her saying, that's the way it should be. At least most of us here have to agree that, yes, this is real data, then we timestamp it, and we move on. So the next data is stored after the last data. And so even the likes of Oracle, IBM, all these companies are now going into blockchain to even for their ERP systems. I mean, if you look at Hyperledger, which we can talk about later with IBM, Oracle is working on a blockchain solution right now that they're going to bring out in 2019 because they feel it will better enhance their already existing ERP systems. So the big companies understand that blockchain as a technology has different facets, but it is here to stay and it's here to help us to actually, become better. And I think specifically for Africa, there's an important opportunity for us to take advantage of blockchain as a technology. Like I said, I'm not going to spend too much time. Cryptocurrency. Again, what is cryptocurrency? It's basically defined as a digital asset designed to work as a medium of exchange using cryptography to secure the transactions and to control the creation of additional units of currency. So currency, I think, is where people have a problem. When we use that word currency, people will get all like, oh, it's going to replace the shilling, it's going to replace the dollar, it's going to replace the pounds, it's going to replace the naira. Technically not. Because, as we go through this, you will find that the fiat currency in the crypto world or the digital asset world, they sort of live, hand in hand. I was in Malta for a week where there's a lot of stuff going on in cryptocurrencies and blockchain. And we had one of the companies who had about 30% of all the Bitcoins in the world, which was based in Malta. And I asked the guys, what do you do? So we changed it into real money. You get what I mean? So they moved the cryptocurrency into fiat currency at the end, right? So they can buy houses and stuff, and book big boats and all that cool stuff that you need when you make a lot of money from buying Bitcoin. But they were an asset finance company who had invested in Bitcoin a very long time ago. So cryptocurrency itself is a form of payment built in computer protocols that allows us to do maybe ease of payment or allows an ecosystem to create value by itself. And one of the big things that's caused a lot of problems, I think, people, was the advent of Bitcoin and not understanding of Bitcoin. People buying Bitcoin as security tokens rather than what it was built for as a utility value, which was the idea was, let us find another way to disrupt the market and use a utility token currency to say, I will accept this currency from you because this is the value, and that value is based around the proof of work done by somebody else within an ecosystem that then allows me to say this is real money. So it's the same way when you go to the printer and say, please print us the Kenyan shilling, or we're giving you the stamp to say this Kenyan shilling that you printed is the right one. I mean, I could go print a Kenyan shillings, right? Find a printer that print me Kenyan shillings. But I don't have the authority to, because the authority doesn't come from me. It has to come from a legal entity, which is where the conversation gets a bit, a bit heated. And when you talk about cryptos, and one of the things you have to understand about cryptos is also, it was defined because when you said a maximum of 21 million Bitcoins can be generated, or was generated. Why? Because it was to be used within an ecosystem where they were trying to get value for the people who were investing, and this is where we're going to come into ICOs, why all these things sort of generated. Again, technology behind Bitcoin is still based around blockchain. Transactional Bitcoin, called Bitcoin ledgers, created around processing offering that allows you to use your peer-to-peer computers as nodes to then create that value. Proof of work, proof of scope, and proof of value. Those are the things in the digital ecosystem that translates to say, what you have created can be accepted by me as a form of payment. If I remove the word currency and I change it to token, I went out the other day, I came to Nairobi, I went somewhere to dance for a bit, and I like my dancing, quite a good dancer actually. I really am, seriously. Patricia, we'll have a little dance. I went dancing, and I got to this place, and they said, oh, give us 200 shillings, and we'll give you this round little thing, this token. Take it, and go inside, and then with that token, you get 2 beers. What does that really mean? I mean, they took my money, but in that ecosystem, the only thing that was accepted was the token, because it created a value for that token. This is cryptocurrency, really, but it's just in a world where we can understand. And when I was explaining to the guy that you've just given me a crypto token, it's like, no, this is just our own token. It's for us alone here. Like, but that is the idea. You created a token in a very simple ecosystem, but you've taken my fiat currency. And when I was leaving, I said, well, I only have one beer. Is there a way I can collect? Oh, no. When I give you that token, that's it. There's no more money. But in a fiat world, I can take the remaining of those tokens and exchange it back and say, now I'm getting back my money. You know, to simplify this, you have to understand that when we're about blockchain technology, cryptocurrencies, they're not that different from what currently exists. The difference is there's no regulation. And when there's no regulation, people panic. And in the world, over the past 100 years, you can see it. Regulation always changes. And technology will always push the barrier for regulation. And people who are smart, financial people, I wish I was a financial expert in the beginning, will step in the middle, take advantage of that opportunity, and then also help the regulators create the regulation to manage what that's, so, and if you look at young people in Africa or in Europe, especially I was in Malta, and I was so impressed with how these guys have decided to turn this little island into the hub for everything blockchain, cryptocurrency, and token generation. And I asked myself, why are these people doing this? I mean, Malta is a European jurisdiction that is very well managed. And why are they doing this? Does it mean that they understand something that we don't? Or maybe they're actually thinking a bit more forward and taking the ability forward. And they brought a ton of experts when they had this Maltese legislation that's coming up last week when I was with the minister and the prime minister. And they explained that we understand that this is going to change. We understand that we can't change it, so let us find a way to figure it out and take initial advantage of it before everybody else gets to where we need to go. So, then, mining evolution. I mean, I'm going to go to this a bit more, but you can get the presentation and then kind of get you through. 3 levels of blockchain. One is the storage of digital records. That's what blockchain really does for you. 2, existing digital assets. This is what they call a token or currency. So when you take those digital assets and you say, I can exchange it for a service, that is a cryptocurrency or a token. And then when you say executing a smart contract, which means that when I give you that thing, if what you're giving me is not what it says it should be, that's what smart contract allows us to say it's self-executing based on what we have both agreed. So I don't need a lawyer to tell me this. Now me and you can agree that this is how it's supposed to work. If this doesn't work, this smart contract will execute itself and I will get back my money because your product doesn't work for me. Again, it's allowing you, and this can be done in record time, in speed, which means cross-border trading, which means this whole thing that the 44 presidents did, it allows us to use smart contracts to aid intra-Africa trade because the biggest issue in intra-Africa trade is trust. I've been to 29 African countries since I moved back, and the same issue is trust. When they hear I'm Nigerian, they're like, whoa, can't do business with you. You're a bit shady, aren't you? And then they say, I'm like, no, I'm actually Sierra Leonean because my son is Kamara. Oh, sorry about the war, man. You guys okay? No, but I actually grew up in London. Oh, you're British. I like you, man. You're smart. No, but my parents actually live in the States. Wow, you're American. You must know a lot of good people. It's again trust, depending on where they view that I'm from. I was in Uganda and somebody was saying, we don't trust those Kenyans, man. I'm like, really? Have you ever met a Kenyan? Say, no, but I just don't trust them. Those people, they think they're better than us. But it's the same thing here. Either you want to face it or not. I just moved. I've never lived in Africa up until 4 years ago when I moved back home. So learning all these things for me was learning from afresh. I was consuming information. I had no existing data. So there was no preconceived idea in my mind. I'm just accepting information and processing it to understand what am I doing here, And if you then move on, this is where I really want to talk about really quickly: ICOs. Now, and this is the connection between cryptocurrency tokens and blockchain. ICOs, if you look at Ethereum, Bitcoin, was a way for companies to figure out that you guys who sit in this table, my first startup, 1999 to 2000, I went to a VC in Switzerland, and they said, we're going to give you 50,000 euros, but we're going to take 61% of your business. And I was like, whoa, okay. I don't really have any money, just take it. Just give me the 50 grand. I really need to get this business off the ground. By the time I sold my first startup, I only had 3% in my business. 3%. And everybody else made money apart from me. I'm still paying till today. And so I kind of thought about that. Then my second startup, okay, let me find my own seed investment from friends and family. Let me find other things. Then I'd go to a VC and they said, well, we can't give you $1 million. Why should we give you $1 million as a startup? What have you done? I'm like, okay, you know what? I got to fund this thing by myself. And when ICOs started coming, especially in Asia and in the US, and Switzerland started accepting a lot of these ICOs, and the idea was that disruption in the way startups actually raised money. Instead of me saying to you, hey, you are an investor, I'm going to give you 51% of my company because this is what I want to do. No, I'm going to generate a token off the blockchain because the product that I'm doing is going to be on the blockchain and it's going to be transparent. This is my project. But if you want to invest in it, here's the token. Hold on to it. Okay? But doesn't mean you have equity in my business. But hold on to this token. If my business, and this is how much I need, if you believe enough in it, go ahead and give me that money. Now, if my business becomes valuable, this token that I'm giving you, one, you can either use it as a service within my business to buy stuff, or for people who accept what I'm selling them. So somebody now comes back, exactly what I told you about the guy. So when I now go to the nightclub and he gives me that token, so the same token I have bought from somebody who has a business idea to say, okay, well, since it's on the blockchain, I believe this is transparent. So I'll buy this token, and the day you want to use it as a service, I will sell it to everybody else who wants to buy service of you. That's all it really is. But then, as a startup, I am now in control. For the first time, startup businesses are now in control, not you guys anymore, sorry. They're in control, we're in control technology-wise. So I can now say, this is how I would like to run my business. So my token is either a security utility or an equity token. But equity tokens are not used much these days because then it comes under legislation. And then the guy says to you, well, at the end of the day, I'm gonna buy all these tokens and then I'm gonna use it when your business gets value. That is all we're talking about here. So if you look at the token, so people call them TG, token generation events, or tokenizations. And a lot of people started moving away from calling them cryptocurrencies in startups to actually saying token generation events. I mean, here we're still saying, ICOs around cryptocurrencies. And there's so many of these tokens. Now, these tokens as well, when the person then says, well, how else can I get value of this token? Some people created crypto exchanges, just the same way you have a regular exchange. So in this crypto exchange, you can now list your token. So remember, it's a startup that's being listed, which is unheard of in your regular world, right? Because you have to be a big company to do an IPO. But here, an ICO means I can be a listed company on this crypto exchange. My token has value because my business is beginning to have value. The more value my business has, the more value my token has, because more people want to buy those tokens to pay for the service. I have made it a rule. In my business, the only thing I will accept is those tokens. So if my business gets value and people want to pay me, then they have to go buy the token somewhere. That's why I list the token on the exchange. So for you who first invested in me, you can now get 10, 20, 100 times the value without waiting for 5 years to exit. It's an exit strategy. So you have all these exchanges, Coinbase, Binance, in 2 years have gone from 0 to $3 billion businesses. And I think that's what scares people in the traditional world. Because we have all these ICOs, companies who have gone from 0 to $150 million in a year to $3 billion. Like, how is this possible? But it's because of this ecosystem where ease of movement of transaction value is becoming the norm. So token generation events are part of what is going to change the face of the way startups, technology people do business. If you look at this, for example, this is very interesting information. From January 2016 to July, ICOs raised over $3 billion. Technically, that is seed funding. In the traditional world, it's absolutely impossible. And I'm going to show you the top 10 ICOs so you see how much they raised as seed funding while controlling their own ecosystem. And as a tech person, it makes me happy because now startups can actually be able to determine and say, okay, this is how we want to run our own operation. Again, what is good and bad about an ICO? One, coins go straight to the community where they serve. So I can use that token straight away. So if I build a business with her, and he decides, I want to accept her token as well, and he says, well, I want to accept the token as well because I want to buy her service, and he's the one who's invested in my token, so he now knows that there's 3 people who actually will use this token, and he decides, I want to set up an exchange, so he can sell the token here. But still remember, he's selling it for fiat currency. So we're still, the interrelationship between the fiat and the crypto world is not going to go away. But people are scared, they think, well, crypto is going to replace fiat. No, that's not going to happen. There is consistently going to be that interdependency because people want to always move money in and out of real world to the virtual world, because this is the virtual world. And secondly, it's unregulated, so that's good for us. For now, we can do literally whatever we want. And while you guys trying to, the regulators gone, great. Why are you guys trying to figure out what you need to do with the regulation? Because it will. And you got places, countries where I'll show you who are beginning to now figure out some form of regulation. Because it's good for regulation to also happen. And a lot of products around cryptocurrencies are protecting themselves and saying, we want to build a token that we feel would assume regulation when it happens. What is bad about ICOs? There are bad things as well about, this whole world we're talking about. So you get too much money raised. A startup that starts on day one raises $280 million. That's a listed company straight away, because you have traditional businesses that have been around for 10, 15 years that don't have $280 million in the bank account. And then the valuation of the company on day one goes from 0 to $3 billion. And that company can be listed in the Dutch Caribbean Exchange is now listing ICOs as an IPO company. I was in Curacao 3 weeks ago because wow, these companies are raising ridiculous money before they even build a product. They're technically able to be listed because most companies can't even afford the amount of money these companies are doing, and they're all tech companies. And tech in any sector, from healthcare to finance to lifestyle to data, literally anything is all technology driven. That is the idea. It's not sector based. It's not about the sector you're in. It's about the technology behind the whole process. So one of the things, obviously, again, some people are good at raising money, but they can't actually deliver. Some people are really good salespeople. They will sell a cat to a rat. Is that correct? A rat to a cat. But anyway, they'll sell one to the other. And then, and the rat will buy it. But at the end of the day, they won't deliver a product because it's easy, if you know how. And then some coins that just shouldn't exist. Some of them are useless, really. And I totally agree with you. But there are some that are absolutely valuable. Binance, the second largest exchange, just moved to Malta. And the Chinese guys, 28-year-old guy. And it's like, we just moved this company in 2.5 years to a $4.5 billion company. And I just got scared. It's like, whoa. From zero, I'm like, when did you guys start? How did you? And it's like, yeah, because the Asians have appetite for cryptocurrencies, just naturally. And they also have appetite for ICOs because they see the value, because they live in a very virtual world. Extremely virtual world. And Kenyans also, you guys live in a very virtual world with M-Pesa, if you really think about it. It's just the difference is the M-Pesa is regulated because it takes its root from a fiat value. Right? That's really the real difference, because you're just telling me I'm sending you money with this PayPal number and I get a code and I get this, like, is that real money? But somebody else is willing to accept it, so that's okay. So it's real money. That's it. If you demystify this idea that it's not such a big elephant in the room, it's actually simple. We do it every day. So if you now look at, again, a lot of these founders, Tezos, for example, these guys raised so much money on day one, they're involved in massive lawsuits. They don't know what to do with the money anymore. They're not even going to do the project anymore. It's just like, we've just raised all this money. We're now proper top 10 ICOs of 20. So you see Stratus, 107 million raised. The very interesting one is Bangkok. Bangkok did 153 million in 11 hours. Can you do that? $153 million in 11 hours. We were watching as the race was going on. There's another Chinese one. They did 30 million in 4 hours. It's a gift ICO. $30 million. He was just watching as the money was just going into. And you know, for me as a tech person, I'm a tech investor. And I sold and bought companies. I'm like, wow, this is phenomenal. Because a lot of the people who buy this are actually VCs, because the VCs now have what we call crypto funds. VCs in Asia, in America, and in Europe. And then you also have all these wealth investors in Switzerland who buy this. So it's actually finance people like you who actually buy most of these ICOs, not regular people like me or him. Literally, it's guys like you, but in these other markets outside of Africa, who are buying all this. And now when we're Malta, they were talking that the next 10 top ICOs, out of the 50 ICOs, is going to be the top 50 in the world come from Africa. And it's going to be over $1 billion, close to $2 billion raise. And it's going to be Kenya, Nigeria, South Africa, Zim, and 1 or 2 other countries. Now, the question is, are you guys going to be involved in that? Or is it still going to be farmed out into Europe? Are you still going to say, oh, we don't understand this, so we can't do it? You guys, Coinbase just opened a bank account with Barclays in the UK 2 weeks ago. MUFG, which is the largest Japanese bank, just set up their own crypto exchange. People are doing this stuff. It's not going to go away. Take some time to understand what it really is and see how we can help our startups in this continent also benefit from this opportunity. Because this startup are the young people we're talking about. They're all looking, okay, if a startup goes to a VC and says, give me $1 million, how many times would they give them $1 million to build a product? You tell them, no, you can't, we're not gonna, but this is another way for us to now begin to use technology and financial services to grow economy. Again, what is the token, like I explained to you before, and types of token, very interestingly. You have what you call an equity token, which slowly, a lot of these tokens are moving into that equity space, where they're becoming equity tokens that people say, well, we'll sell you this token, X amount, but we'll only give you 2% of the business, because we now feel that rather than just giving you the token to hold, we actually want to give you a little bit more value in the operation, and you can leverage some of the shareholding opportunities as part of the dividends, but you can still sell the token on the exchange. So you make money 2 ways. 1, if the token value rises, and 2, you have some equity in the business as well. And some businesses are beginning, like the new ICO that's about to happen, they're about to raise $78 million, they're doing an equity token. And then you have, ICO of services, which, then you have security tokens, which in the likes of Bitcoin would happen. And, again, it kind of falls under some kind of regulation because then it's a tradable token, but you look at things like Bitcoin futures, which is coming to play now, that allows us to manage the value of Bitcoin, which is why it's gone from almost 20 to it's playing between 8 and 10. It's part of the futures market in Bitcoin, and you'll understand how futures markets work. Then the interesting one, which a lot of companies in Africa will benefit from, is what we call the utility token. Because as I explained, it's that token value where you use it to raise money, but you have an ecosystem where people can use that token, and you have these exchanges that allow you then to be able to trade that token as an investor and actually get your money back. So even for as an investor, it allows you to get your money back quicker than you would have in a traditional way, which you can then go back into the market as well. And some of the jurisdictions that have embraced crypto tokens and blockchain tokenization, you can see Mauritius is the first African one that has actually almost finalized their craft of their legislation around tokenization for ICOs. So they're inviting everybody to come to Mauritius. Don't worry about Kenya. Come to Mauritius and do your ICO there. We'll talk to all our banks to help you open bank accounts. Malta, the same thing. We were there last week. Jib, we were there at the beginning. Switzerland already go. Japan, if the largest bank is setting up their crypto exchange, I guess I can all go to Japan and open bank accounts as a crypto company. And again, you have the UK that are now thinking about better legislations. Obviously, Singapore and Curacao, who co-manage the Dutch Caribbean Exchange, basically trying to do these ICOs on an exchange. So there's a lot of countries. Yes, there are countries that are negative. Nigeria, said, yeah, we can't do anything. And in my world, I'm like, that's okay. It doesn't bother me, if you decide to, but it does not change what's going to happen. Because the young people we're talking about, who are under 30, who are extremely smart, extremely intelligent in this continent, they will find a way. So the question is, are we going to help them find that way? Are we going to understand, find a way to bridge the gap while we're trying to figure out the legislation and help them find a way? Or are we going to turn them away and say, well, we can't do anything for you because we don't understand this thing? That's the question we should ask ourselves, in this room when it comes to technology. Because technology at the bottom of it is what drives every sector of industry that you see growth in. It's driven by technology now. There's no one sector that you will name that any company that is growing that is not driven by technology as of today. Irrespective of what they do, even they sell water, it's driven by technology. Innovation, nothing is new. We're just innovating on what currently exists. And because Africa presents a certain type of opportunity for young people, they are now innovating based on the ecosystem and with very little infrastructure being able to actually produce opportunities. And that is phenomenal. I mean, for me, being somebody who's done startups for quite a long time, you see that, in Europe we had a different way of thinking, but when you come to Africa with the young Africans and the way they are across this continent doing startups, you understand that it is phenomenal with the amount of infrastructure that they don't have. And finally, should Africa embrace blockchain and cryptocurrency? My view is, yes, we should. Obama, yes, we can. Thank you very much.
Thank you very much, John. Appreciate it. That's a cryptocurrency. Do you know that? I'm telling you, the uneducated people are very scary people. Uneducated, educated people. It's a cryptocurrency. And in February, you all know about, who knows about the Petro? Petro, let me see your hand up if you know about the Petro. The Petro is the Venezuelan official Bitcoin, which Donald Trump banned on an executive order last week. Did you see that? Wow. So Venezuela in February launched it. They've used it against the hyperinflation. I know you know this is happening. And they've backed it with the crude oil reserves that Venezuela has, which I know you know, is until Bahrain found a ton yesterday or the day before. Is the largest or was the largest in the world. So this is a real thing. It's true. It's realistic. And in fact, so much so that, how many of you, this is going to be such a fun question, attended the World Bitcoin Forum? How many knew where it was? The World Bitcoin Forum. Let me see how many knew where it was. Guess a country. The World Blockchain Forum? Where was it? Say it loudly. It was in Nairobi. It's like, you're the only one who knew. Everyone's like, oh really? It was? It was. Here's something that's interesting that Bitangi Demo said. He's the chairman of the Blockchain and AI Task Force. He said, in 6 months of digitization of the lands registry, revenue jumped from 800 million to 9 billion. He says, with blockchain, and this is without blockchain. He didn't want to put a number to it, but he said blockchain cases will transform. Blockchain will transform and reduce the consumption corruption in the lands ministry. That's from 800 to 9 billion. That's 10x plus. And that's the impact that digital currencies will have. I really want to know what your place is as our financial experts in this space, because that money was a lot. That was a lot. Next session, ladies and gentlemen, we're going to jump right into it. Did you like what John had to say? Did you? Did you? Please give him a hand as I invite everybody else up on stage. Remember, there's a question card on the middle of your table. I'm happy if you fill it out. I can pass it on to him and invite him on later to have a conversation with us. But right now, we want to talk about sovereign debt. I'm going to start by inviting our moderator, Peter Motoko from Thomson Reuters, to come up on stage, and also invite our fabulous guests, Dr. Thomas Bwire. He's the senior principal economist in the Bank of Uganda. Anthony Mathusi, partner at Ernst & Young Kenya. You've seen him on on some of the news outlets recently. Dr. Mbui Wagasha, Senior Economic Advisor, is EO of the President's big advisory group in the Republic of Kenya. It's a pleasure to be able to have him here as well. Olive Zaitun Kigongo has come all the way from Uganda, as Uganda's investment authority, and Jared Osoro from KBA. Tafadhali, all of you, please come on stage. Just give them a hand as they come on stage. Peter Mutoko will do this with us. Karibuni sana. Take a seat. We're going to do some technology things with the microphones for you. So as we do that, everybody else can chat amongst yourselves.
Yep.
Already finding out how that works. And then finally, with me from London is George Spetkos. He's definitely our keynote speaker. The challenge that he brings to us is, as an international investor looking into Kenya and seeing the opportunities we have on infrastructure, how that is working. Why are they interested in being in East Africa? So with that said, again, I welcome you. The conference is ongoing. We are excited. It's a full house. And the whole idea is to start the conversation around where we are at as investment people and how we are taking our place in changing things in the market. I would be happy to take any questions or to allow you to ask any of the questions to the panelists who are here. And then at the end, I will speak about what CFA Institute and the society are doing within our jurisdiction. So thank you very much. My name is Patricia Kiwanuka. I'm the president of the CFA Society in East Africa. Any questions or comments? We start. Okay.
Yeah, thank you very much. My name is Ayeko Ongodia. I am the CEO and founder of Zeno Technologies. Zeno Technologies is an investment management firm that's using technology to extend professional.
We switch. Okay, we can do that.
Sorry.
That's fine.
My name is Ayeko Ongodia. I am the founder and CEO of Zeno Technologies. Zeno Technologies is an investment management firm that's using technology to extend professional investment guidance and management to the masses. We are licensed as a fund manager in Uganda, the first fintech company on the continent to get a fund manager license. We also run 4 unit trust funds in Uganda. We are also the first fintech company on the continent to run unit trust funds. We are in the initial process of initiating a conversation with the CMA Kenya to run a similar thing for the Kenyan population and then go on to other countries later. What we really do is take the process involved in answering the question. I want to invest for retirement. I want to invest for a child's education. I want to invest for a specific goal. What should I do? How should I invest my money? What are the options? How long should I invest for? So we've designed a process that takes a person's information, processes it, and then makes a recommendation on how that person should invest their money. And then that person can take that advice, execute on their own, or we can execute for them, and they have a platform where they can view their transactions, the progress towards that target, the investment performance 24/7. That's what we do. Thank you.
Hi, as Patricia mentioned, my name is George Spensos, and I'm also on the board of directors of the CFA Institute. And just to give some perspective, the CFA Institute is the global body of investment professionals. We have about 150,000 members globally, including over 150 societies. And one of the biggest growth societies is here in East Africa. Last year, the membership has grown from just under 40 a few years ago to over 130. Last year alone, the growth was 29%, which is the highest growth in the whole EMEA region. But the really good news is that there's a pipeline of about 900 candidates that are writing the CFA exams. And for the CFA Institute really represents two things: a commitment to education and a commitment to ethics. And to see this growing group of educational investment professionals in the region is very exciting to me.
Thank you. And finance.
Hello, everyone. My name is John Kamara. I'm basically an entrepreneur and also a serial investor in a number of different industries, all driven by technology. And one of the things that I was talking about today here is blockchain solution, cryptocurrency, and ICOs around the startup industry in Africa and the opportunity that blockchain offers the African continent, but also a lot of young people to take advantage of this opportunity to be able to then build, the companies of tomorrow that we need. And I think that without a doubt, financial services, the financial industry is a very important part of the blockchain explosion, the ICO explosion, and also the explosion of cryptos or tokens, whatever way you want to call it. But like I said in the room, either they like it or not, it's not going to go away. So we either embrace it as Africans, figure out a way to make it work for us, or we sit back and just wait. Thank you.
Are there any questions so far, or we? Yes, go ahead.
My name is Cfa from Radio Citizen. I have a number of questions, but I just ask one by one.
Okay, go on.
Purposes of the rest. And the first one, from the discussion so far we've seen from the forum, you've talked of the need to have more education about financial technology. And what maybe would you suggest should be done beyond this? People in finance, and I didn't see 5 hands. So what needs to be done to get people to understand?
I think around what Patricia has done is more knowledge, more conversation, because any information sits down to the public via conversation, consistent conversation at very top level, and also at a level of understanding. Because I think a lot of what's been happening with blockchain and crypto is around the development space. People around the technology space have been talking about it, but the financial space has been completely excluded from that conversation and other sectors. So I view that, if you look at the countries like Malta, in Malta there's a clear idea of structure. There's blockchain around legal, because there's also the legal part of blockchain. So you have lawyers who do lawyer conferences, summits on blockchain, teaching people around the legal enterprise of smart contracts in blockchain. Then you have the whole financial sector in Malta that talks about blockchain from a financial perspective. Then you have the tech sector, and you have marketing people also talking about but they all come together consistently to now discuss how each party can help themselves to actually find ways to move blockchain forward or cryptocurrency. And then that allows a regulator to have a better conversation with everybody, because everybody's now involved in the ecosystem. But where the ecosystem is done in silos, that's why we have, this problem where somebody will, some parts of the ecosystem do not understand, what is happening, and some parts understand it very well. And so it's difficult for us to bridge that gap. So we all need to have consistent conversation as groups, and I think the CFA has probably led because of the type of people that we have in the group. So we're talking about finance, technology, and also branding. And I think that's probably how we do need to start to begin to engage this conversation.
Yeah. If I may add to the CFA program within the curriculum, it's an always evolving curriculum, and one of the things that there's been a real push for in the last few years is topics that have become of more interest to the population, ESG, so that's environmental, social governance topics, but also financial technology. So these topics are being incorporated now into. When I studied the exam 20 years ago, these topics weren't in the curriculum, but now they will be in the curriculum. So it's an ever-changing curriculum to meet the needs of the investment environment.
Again, I apologize. Paul Muthaura was not able to join us today, so my apologies for that. But one of the things he talked about when he gave his opening remarks is, as the CMA, they're now recognizing, we can always start asking for regulation to push things. As John said, technology is already moving forward. This technology is happening. It won't stop. Regulation will catch up. The challenge to us as investment professionals is, what are we doing about it? When I get a phone call that asks me, is this cryptocurrency? I mean, we all saw it on Facebook. Is this cryptocurrency a pyramid scheme? What is this blockchain? What does it mean? We all reacted that way when we first heard about M-Pesa, but that didn't stop M-Pesa from happening. So as he says, if we start understanding and bringing groups together that have those multiple disciplines and synchronize that conversation, it will make a difference. Yes.
My name is Abel Mukati from this time. Probably just because we've started a conversation with relations, I'd just like to.
As I said, our main sponsor is Capital Markets Authority. At no one point has Capital Markets Authority come to us and said, we are not going to regulate this. If anything, and as Paul mentioned, they have been awarded the top innovative regulator within the continent. That in itself tells us that the challenge is not the regulator. We have ETFs in the markets, we have derivatives, we have real estate investment trusts, we have all these products in the market. Why aren't we consuming them? So your challenge to the CFA Society is very right. Now, as CFA charter holders, we rely on analysis, we rely on understanding data. So we are pushing back to our members and saying, take the time to understand, research, use that education. You have the right skill and platform. Equities, bonds is no longer enough. The market will happen. People will make money. Can we be involved and make that? And can you trust us? Our markets are built on trust. Cryptocurrency is a trust game. If you don't trust the advice that we give you as an investment professional, why would you trust anyone that says regulation? The front page of our newspapers today is talking about a fine to banks. If you can't trust your bank to do the right thing, how will you trust cryptocurrency that's in the cloud? How will you trust him with his IT platform? So we need to strengthen that. I think the regulatory framework is strongly in place within the region. I'm not just talking about Kenya, but the challenge for us is to take that a step forward in terms of implementation.
And I also think, just to add to what she's saying, that if, I'll give you a perfect example. My sister, she's in her 50s, came to me one day and said she's buying bitcoins for a group of people in decimal point. There's about 10,000 people that she has in her group all over Africa on WhatsApp, and she's buying bitcoins with them. And I asked her, what are you doing with this stuff? And she's like, no, we're just keeping it. Now, she had no understanding of technology. She's not a finance person. She's just a regular individual. Mm-hmm. If she goes and takes that risk to buy Bitcoin from people she does not know in Asia, even while the government is saying, no, do not buy Bitcoin, she's not listening, because she's thinking the government doesn't want her to make money, so she's not listening. If she can do that, and we as so-called experts, or in the financial sector experts, we're not progressively trying to find a way to bridge that gap,
That is where the disconnect lies. Because the masses, anything that the masses have already adopted as a service or a product or something that they're interested in, the big challenge there is if we don't react positively in a way that helps those masses, because we have an objective to protect people, which is what regulations are there for. But if you tell, it's the same way when you tell a child, don't do this, what does the child do? They're going to do exactly what you told them not to do. So it's your job to protect that child. Rather than saying don't do this, let us understand why you want to do this, how you have to do this, and if you must, how can we protect you in this ecosystem? And I think that's where, when the president here announced the task force on blockchain, that's probably the first place, apart from Mauritius, it's the first country in Africa that's openly come out and say, we are willing to try and find an answer to, this growing concern called blockchain, cryptocurrencies, and ICOs.
Yes.
Yeah. My name is Kimani O'Brien with KBC. I have a few questions. How big is the
one of the things keep switching. How big is the crypto market? I think there was a statistic that was saying that about 163 billion shillings was tied into Bitcoin, which is one of the cryptos, Kenyan money, as of last year, which is I think about 3 or something percent of the GDP comes around that. That's a whole lot of money. To be in Nigeria, we know that through some data that we gathered, about $40 to $50 million every month of crypto is bought and that is by what we call the lower middle class. That's the data that we have, but not even the upper middle class, because a lot of people hide what they do, but the lower middle class are quite happy to give you information about what they do. So that kind of tells me, if you extrapolate that number and you do a few analysis, that it's quite a big market in terms of the growth rate. Now, with cryptocurrencies and the position that it has, again, define two things. There is blockchain, which is a technology, and we must all embrace blockchain, either from media perspective to lifestyle to entertainment to finance. Blockchain helps us as a technology to do things better. As simple as that. So that is different from cryptocurrency. And I think the problem has always been, when we talk about blockchain, people just think Bitcoin. Bitcoin is not blockchain. Bitcoin is a form of blockchain, which is based on the financial market, which is why it's called a crypto. Blockchain can be used for a number of different things. We've seen it: healthcare records, medical, financial services, privacy records, transparency in financial peer-to-peer. So it's a technology like any other form of technology. But with cryptocurrency, the problem is that we have quickly gone to the idea that cryptocurrencies will take over fiat currencies. That people will stop using Kenyan shillings and start using some currency created. That's not really the idea around cryptocurrencies. It's a form of transaction that still lives side by the fiat world, but it allows us to do things quicker, better, and also allows people to be able to create more value within specific ecosystems. So if we understand this, because like I said, when people buy Bitcoin, what do? They want to cash it out into real money, don't they? Because they can use real money to buy a house. You're not going to sell your house with Bitcoin, are you? But if you're a real estate agent and you build a property and you raise money and you decide, I want to use Patricia coin to only buy in my real estate, I am creating a currency that allows me to do things within my ecosystem. So if you want to buy my house, please take your Kenyan shilling, change it to Patricia coin, and come and buy my house, because I feel it gives me better value. Part of it is also, I feel that I don't have to pay much taxes if I use Patricia coin. That's part of the reality that also a lot of people are using to, when they go into cryptocurrency. So you can't just change fiat currencies and say we're removing all fiat currencies and we're going to go into it. It doesn't work that way. But cryptocurrency is something that's here to stay, that's going to give us more value. And when we talked about ICOs, for startups, tech companies, even businesses here, using the idea of blockchain and creating token generation events, which is sort of cryptocurrencies, helps these companies to raise fund in a completely different way. And that is really what we must focus on what can it do for our startups, our businesses, rather than are we trying to change the Kenyan shilling for Patricia coin?
Cool. John is going to be here if you have questions that are cryptocurrency related. If there's anything else around the fund management, development, or the CFS Institute, it's a good time to kind of also introduce that conversation.
Yeah, maybe we take turns at this seat. So when
let's see what questions.
Yeah.
Okay.
Probably just before you take
Before he moves, okay.
A last question on the issue of blockchain. Does it concern you that central bank governor is on record championing for blockchain and not expressing his faith on cryptocurrency?
Say that again?
Does it concern you,
Uh-huh.
as experts in the cryptocurrency segment? The central bank governor has been championing for blockchain and has expressed his faith on it, not on specifically on the cryptocurrencies. And what is your feeling about that?
I think it's a good thing. He's championing for blockchain, which is a technology, right? Is that what your question is? That he's championing for blockchain but not championing for cryptocurrency?
Yeah.
Again, like I said, I think let's even start from blockchain. Let's all adopt what blockchain can do for us as people, as Africans, and how it can help us grow our economies. Cryptocurrencies, crypto generation events, they will come to play as people understand legislation better. And like I said again, there is a way that we use cryptocurrencies within ICOs that doesn't necessarily, again, the disconnect is when the central bank says that, people think that we are going to replace the Kenyan shilling with Bitcoin. That is not the objective. Nobody's trying to replace the Naira or the dollar, but what we're trying to do is create a virtual world of currencies where we can do things in the virtual world, create value, and then still be able to transact with the real world. And I think until we understand that, which will take some time. So as a tech person, I don't really get bothered too much about what the legislator says or what he doesn't say, because I also understand they need knowledge a little bit about the real intricacies of what we're talking about and the part of the project that we're talking about, because you can't just throw something at somebody who doesn't really understand it and expect them to make an informed decision. So the central bank, everybody needs knowledge, and the more knowledge they get, the better decisions they will make.
When you look, still on that area of cryptocurrency, because we can't run away from it. It's a reality. It's happened. Here like this, whereby now you're talking about 163 billion shillings. What are some of the gray areas that you think the authorities should first of all focus on? To
authorities should do is first get education, a lot of knowledge. Malta took time to understand what cryptocurrency was, where it was coming from, why people were going to use it, and how it would live with the fiat world first. And once they do that, then also the regulators should have conversations, dialogue with people who want to build cryptocurrencies or who want to do token and understand again what it is, what is the value. Because for you to write an effective regulation, one of the problems in Africa, we've written regulations in silos. We do policies by experts without consulting the real people who actually use or who will use this policy, and those policies never translate to reality. So the regulators do need to converse with the people, and who are the people who want to create this is the tech world and a lot of the people in the financial sector. So if you don't have those conversations with them to understand, I give an example earlier on. I went to a bar to dance. They asked me to buy a token to enter inside to buy a beer, because that's the only thing I could use in that space. Now, in that same space, there was a woman who was selling clothes, and she would accept that token from me because she's gonna get paid her money back when she delivers the token to them. The guy who has the token is an exchange, because she takes the token back to him and he gives her real money. These things exist already, but it's just the magnitude at which it's happening is what is disrupting all of us at the moment. So the regulator has a job, and I think regulators are very quick to say no. The idea is, because when you say no, you're also defeating the purpose of what the technology could have done for the country. And again, I'm glad that the president came out forcefully and said, we will look into this, and that is the first thing to do.
Okay, moving on. We'll get into you guys. Aiko, do you have any questions for? Eiko Godia on fund management. And on CFA Society. Okay, we can probably take 2 more questions and then we'll call it a wrap. And then you can target whoever you want for the next bit of the session. Any 2 more? Even on the same, that's fine.
Yeah, just ask my question, good response to the one you have, you can possibly do. Again, I bring you back to the elephant in the room, government regulation. And first, I feel it's a shame that we didn't have any government representative who will consider here. And first, we've seen you welcoming that the government is paying attention to blockchain technologies. But my question is, isn't it ironic for government to try and bring in regulation when the whole foundation of blockchain technology is based on lack of a central governing authority? And just around the same question, the task force formed. There've been fears that this task force is out to, to bring down bring down the advancement of blockchain technologies in the country, and what could be a response to this? And then my other question, I think this one is more specific to cryptocurrency than of blockchain technology. We've seen the opportunities blockchain technologies represent for the country, and that is clear. But with regards to cryptocurrencies, there are people who see it as a bubble which is likely to burst because it's based on demand and supply. Essentially, there's no, basically you can put out an ICO today and people can jump across all currencies, leaving one particular currency, let's say the Bitcoin, you go to Ethereum and leave Bitcoin exposed. And there's been fears that the whole entire cryptocurrency trading is a bubble that may burst, but so far we haven't seen it burst.
Yeah.
What going forward? How do you see it?
Take your first 2 questions into one. Blockchain technology, it's a technology. I don't think the idea for the government is to regulate blockchain. You can't regulate Qt software. Qt software is a platform that you used to build. You can't regulate. It's to understand how they can implement it in everyday life. I think that, in my view, that is what the task force is set up to do. You cannot regulate technology because technology is ever evolving. The use of technology is what you can regulate. Is it used in financial services? So how does that place meet financial services? So what does that technology mean for financial services? So how do we regulate the financial part of what that technology does? That is when you start talking about regulation. So if you look at countries that have created licenses for what we call ICOs or tokens, they have not regulated the technology because they can't. They've actually, Mauritius is building a blockchain center of excellence to train people how to use blockchain, to train people how to go into the world and develop blockchain so that you can go and hire people from Malta to develop all your blockchain solutions, because it's a technology that's going to evolve anyway. Since IBM and all these companies are beginning to use blockchain, but the cryptocurrency part of it, which is just one layer of blockchain, just one layer. And when people talk about cryptocurrency, I think all of you mean Bitcoin, if I'm correct. Everybody is, Bitcoin. There are over 1,000 cryptos. Some of them are useful, some of them are useless. Okay, but because Bitcoin was the first one that got value, everybody, when they talk about crypto, if I could go into your mind now, I know you're thinking about Bitcoin. That's where your focus is. But there's so many other cryptos where, like I said, the reason why cryptos are created is because companies decided that we want to get funded, but we need something that we can give back to George, who is an investor. So I'm going to create a pseudo currency within my ecosystem. Now, some other people saw an opportunity and say, we will create an exchange where you can take that currency and change it into fiat, because this is what we call the value. What is the value of a cryptocurrency that I create? Is the value that I think of what my project is. When I say my currency is 1-to-1 with $1 on the day of creation, it's really my value. So this is where the government comes in to say, okay, it's now gotten into the financial sector, into a sector that's part of everyday life. Okay, how do we manage these exchanges? How do we regulate these exchanges so that when you are about to create, what Malta is doing, when you're about to create a token, there's a set of license that says for you to be able to create a token, this is what you must meet. So that by the time you take it into that exchange, you already have met the basic values of what that token should represent. And I think that's what's going to happen. Again, you can't expect government. Some governments are farther ahead than the other because they started understanding cryptos quicker. And, so I think Kenya in Africa is probably also one of the more progressive ones. And I do believe in time they will get there. But it's not going to go away. Either they like it or not. So they will get there. And I think they understand that.
Okay, as we close off, just to protect my friend, the chairman of the task force, Pitagen Demo, I think they've actually done a good thing. I think one of the statistics that was just released today is on the land registry, that just by automating, you've gone from revenues of 800 million to 9 billion shillings. So I don't think the task force is there to stop this process. And as I said, from Capital Markets Authority perspective, they're actually very keen to get us involved as investment professionals in starting to close that gap. The conversation he just had of 1,000 cryptocurrencies, that's the same thing as any share on the stock exchange. You don't buy all the shares on the stock exchange. You don't just buy one share. You have to understand why you're buying it and what is under what you're buying. So on that basis, I want to thank the panel and all of you for being here. We are truly honored, and I wish you a very good day. And if you want to continue the conversations, please feel free to talk to any one of us. Thank you.
Thank you very much.
These are bonds or promises that the government issues when it borrows money from the public, that they will pay them back with a return, and in exchange that money is taken and used for investments. So, for example, Kenya has infrastructure bonds, sovereign bonds, and these particular securities are designed to invest in the building of roads, bridges. For example, the rail that we've seen built from Mombasa all the way to Nairobi, and it's continuing on towards the Ugandan border. That's an example of something that is funded by an infrastructure bond. Thika Road is another example that is funded by a sovereign bond. So they are ways of investing in the economy to help grow and boost the GDP of a country.
So you're talking about infrastructure bonds as what the government has invested in, but what other forms of sovereign bonds would you expect or would you have?
So another version of a sovereign bond is a euro bond. So Kenya has currently 4 euro bonds that are active. We had two successful euro bonds that were listed this year. And these euro bonds were extending the tenor, the duration that the government pays for or borrows the money before it has to pay back to whoever lent them the money. So these euro bonds, again, are usually borrowed with a specific project in mind that probably requires foreign capital to use to develop, and no need to exchange the currency. However, even local projects can be covered by this, and the government is free to choose how to spend it in forms of development. On top of that, we have short-end instruments. These are known as bills, treasury bills. So these tend to be for short-term commitments and expenditure, usually plugging the gap where the budget might fall short. For example, they will take the short end. But the short end is not really aimed for development because of the nature. They have to pay it back quickly. So they tend to borrow long term, where you spread your risk and also your repayment, and it's less pressure on the fiscal economy of the country.
Talking about spreading the risk and longer period of repayment within the context of the Kenyan euro, the active ones. What sort of time are we looking at in terms of how long it would take to repay the equity?
So a typical example is a 30-year bond that has been issued. So that means you will pay the coupon or the interest every 6 months or so for the whole 30-year period. That is the return that the investors are getting. But the bulk of it, the weight of the loan, so the 4 or 5 billion, whatever it is that a government is looking to raise, that doesn't have to be repaid for 30 years. And as you know, time value of money, $1 billion today can do a lot more than $1 billion in 30 years. So the idea behind this is utilized well. Not only will the money generate the resources to pay itself off, but it will leave the country and the economy at a higher level than where it started when they took the bond from the market. So that is the idea of taking a longer tenor bond. So an example is a 30-year. The ones that are maturing, there was a 5-year, there was a 7-year. Those are considered to be medium to short term in the bond space. And 30, 20, 15 years now are looked at as slightly longer. And that's what Kenya was doing, restructuring, so that they have more room to generate returns for their investment.
Let's look at, when you're talking about a loan, obviously there is a question of interest rate. And therefore the question becomes, what is the rate, if you like? Is it on a reducing balance? Or how exactly does it work in terms of working out the interest rates?
Okay, so the interest rate basically, or the coupon as it's known, is what the government promises in exchange. So that's the return for the investor. Now, because they have two types, the euro bond, which is dollar denominated, and there's also the Kenyan shilling, the coupon rates tend to differ. The domestic market tends to be looked at as more volatile, more risky. So the return on the currency is always higher when you peg it to things like inflation and other things like that. And a typical example for the local currency would be anything between 10 to 14%, for example. Whereas the euro bond, the last two were successfully issued at 7.5% and 8.5%, which is considerably cheaper. But when you look at it from an international perspective, it's expensive because America is able to issue a similar debt at 2.5%, maybe 3%, as opposed to Kenya because of the risk perception. So you will find that, for example, the country rating or the sovereign rating for the Kenyan government is lower than that of the US government, and therefore viewed or perceived as riskier, and this in turn leads to a higher return on the coupon. So these are some of the ways of calculating the return. But at the end of the day, it benefits the country to have the coupon rate as low as possible because it's debt. And the lower the debt, the better and easier it is to sustain it and to fund it.
But what then would be the rationale for government of Kenya to go for a Eurobond if you could get a similar facility with the US at 6 points lower, percentage points lower? What would be the rationale behind that?
Well, locally, the interest rates are quite high. Of course, the Eurobond is cheaper. but you can't put everything on Eurobonds because there are certain factors that you have to consider, and this is your foreign debt exposure. So there are checks and balances in place that limit your exposure to foreign debt to a certain percentage of your GDP. So as much as it's attractive in terms of costing, you have to factor this in. The other thing is it also affects the currency, the foreign exchange, because whatever you convert, you must buy back because you have to repay people in their currency, in dollars. So there is also the element of destabilizing the currency to a certain degree. So these kind of things limit the amount of money they can go to international markets. And also, I mean, international players, if they see you just taking and taking and taking and you're not, in a foreign currency, they'll also ask questions. So you also have to show some level of discipline as a government. Ideally, local funding will be the best. It's less pressure, less rigid, easier to restructure. But of course, it comes with its costs element. But again, it's needed. Yeah.
Lastly, in the context of blockchain and cryptocurrency, how does that connect with the concept of sovereign?
So, I mean, blockchain, for example, is a very transparent way of entering into contracts or into agreements with a counterparty or multiple counterparties. So there's always an opportunity probably for the sovereign bonds to adopt a similar approach to blockchain. So they can be registered and the owners transparently put on the blockchain. And then this blockchain can be used to verify. Should you need to put that up as a security for an investment, or you need to liquidate it and sell it, you can quickly know who the owner is and all the details relating to that. And it also reduces, the fraudulent cases that are there, where people can come in, with fraudulent papers or ledgers claiming that they own bonds that don't really exist, fictitious bonds. By just creating accountability and a structure where every stage or every process in the life of that particular bond or debt is monitored, and everybody knows where everyone is. So it's like borrowing a leaf from what the government is doing currently on digitizing of the land and title deeds, where now it's a lot more transparent.
Very quickly, in the sense of the current structure, what is it like in terms of regulation, in terms of uptake, and maybe if there are gaps, how do you see that moving from the current situation to having an environment where then it can be applicable and therefore formally, if you like, taken up?
Well, it all boils down to understanding the product. So I think the first stage really is how can we upscale the government and all the stakeholders to be ready and to embrace this technology. And then do we have the infrastructure in place? So, the technology, the training, the resources that are needed to actually pull this through, are all these in place for this to work? And then from there on now, it's probably to look at it small scale. So piloting from a small level, test it, see how it works, see how it goes, how it flows. And then if it works, or if there are any problems, they can be addressed at this level. And then it can slowly be scaled up, because I know scale is where the benefit comes in. So slowly it can be scaled up to cover multiple functions within the government. It's very good to see the president launched an 11-man team to look into blockchain technology and how Kenya can adopt this. And that is good because it's happening. It cannot be stopped. That is where we are heading. That is the future. So the sooner we embrace it and the sooner we make it part of our system, the better we can use that to our advantage.
Very well. I think good enough, right? Yes.